amid the difficult trade tensions around the world. Let's talk to an expert about it. He's Stephen Trent, head of America's Airlines and Latin Transports at Citi Research. Stephen, thanks a lot for joining us. We've reported the basics on Delta several times. It's pulled its forward-looking guidance. It points directly to trade uncertainty as the reason. Tell us in more detail and with your sense of expertise exactly what Delta has said today.
Yes, and thank you for having me on. So I think that what you are seeing is a reflection of the broader economic environment. So this entire situation, economically speaking, has nothing to do with Delta. When we look at the customer base, I think that consumers need more clarity on what could be the economic environment going forward, and that could help them come to decisions on discretionary spending. And I would say for companies, corporate customers, kind of the same. Before they solidify investment plans for the year, people at least need to have a little more clarity on the economic environment and the dust to settle on what's going on with tariffs. And I think until these entities have that, we do have a situation where businesses such as the airlines are going to have to be careful. That being said, we still believe that the likes of Delta and the other network airlines look much better positioned than their discount carrier counterparts.
Okay, so many times when a company withdraws this guidance, analysts respond by cutting ratings. You've not done that. If I understand correctly, your commentary, you don't see this as an execution misstep by Delta. This is the macro environment. So you've kept a buy rating on the shares, correct?
Yes, correct. And I think you said it well. I think when one looks at a company like this that has executed well, are there certain self-help measures that they can take? The company suggested, for example, that we should see reduced capacity deployment in the second half of the year. Depending how the final formula and all this tariff stuff works out, the tariffs, of course, could potentially exacerbate aerospace supply chain problems. That in itself could help limit capacity deployment, and all else equal, that's something that could help the network airlines such as Delta protect unit revenue.
Do you expect to hear more of this from the incumbent air carriers as the quarterly earnings season rolls on?
Yes, absolutely. I would hardly say that Delta is going to be unique here, but I would emphasize again, when one looks at today, at least so far, where we are seeing some softness, it seems to be coming from domestic main cabin and domestic basic economy, lower socioeconomic strata. We're already not traveling that much, and it's possible that segment could travel even less if their grocery prices go up because of this tariff issue.
And is that why you prefer the mainline carriers to the discount carriers? You said earlier that you think the mainline carriers are, if that's the right term for that sector of the market, are in a better position than the discount carriers.
Yes, so that's definitely part of the argument. So when we look at the mainline, the network airlines, the full service airlines like Delta, United, American, Alaska Air, those carriers are still much better positioned in terms of the verticals they serve. So premium passenger flow, robust loyalty program, robust co-branded card remuneration. And yes, while they do have domestic main cabin and they do have some basic economy products, the lion's share of the top line is coming from those other segments. And then we think about the paucity of new capacity on a per capita basis. If you're a network airline, you're really going to defend yourself with strong unit revenue. If you're a discount airline, you're going to defend yourself by having the best seat mile cost profile you possibly can, with a lot of main cabin flow from lower socioeconomic strata. So at least the way we're seeing today's environment, if you're a discount airline here in the United States, it's a tougher setup.
Delta says it can't forecast its business because of the great macro uncertainty. We are surely going to hear that from not only other airlines, but other companies through the S&P 500 as they report earnings. Just what do you and your colleagues at Citi believe it will take for the administration to slow down on some of these trade announcements after they hear company after company saying, we can't plan for this environment?
Yeah, great question. And sitting here as an aviation analyst, sort of giving you a broad answer is going to be a little bit above my pay grade. What I can tell you is I think that's right. When one looks at the uncertainty today, there seems to be, I would say, a great lack of confidence around tariffs, the math behind them, what is sort of the logical next step. And even messaging from the administration where different entities are saying different things. None of this is creating certainty in the market. I think until we get to some breaking point, so to speak, where we finally have the dust settle on this tariff dispute, you could see certainly the airline group react in a volatile manner with respect to share price action. What's that breaking point going to be? I honestly don't know. I would say that the equity market value destruction across the board is already sending a pretty darn strong signals to elements of the economic and political establishment here in the United States.
Stephen Trent, thank you a great deal. He is head of America's Airlines and Latin Transports at Citi Research. A great conversation about one particular company, Delta, and the sector more broadly, the airline sector. Coming up, we'll